Hey everybody, it's Andy with Overdrive Accounting, and in today's video I'm going to show you why S corporations are awesome. So you can see here from the screen we have Patty's Pub Schedule C with net income of $67,853. Now if we go over to the 1040, you can see that this ended up costing Frank about $14,508 of income tax and self-employment taxes. Now what I'm going to do for Frank is I'm going to elect to be taxed as an S corporation. None of the numbers are going to change. In fact, the only number that's going to change is going to be the payroll taxes associated with the wage that I am going to make Frank pay himself throughout the year. And so that will lower his net income slightly, but the taxes paid from the payroll taxes associated with his wage are still minor compared to the amount of tax savings he will see by the time I am done. Okay, so I have made the S corporation election for Patty's and Frank. Frank was issued a K1 from Patty's, which reports his share of the profits from Patty's. And Frank also received a W-2 for the services he provided to Patty's. And so now we can go ahead and take a look at the differences of Frank's 1040 from the 1040 he reported when he filed Patty's as a Schedule C. So the first major difference you're going to see is Frank has wages here on line 1 of $20,000. Line 6 is going to be less than it did when he filed as a Schedule C, $46,323. And the reason why that it is lower is because we have wages of $20,000, which was expensed at the entity level. Patty expensed the wages that were paid to Frank on its 1120S tax return. And there's also $1,530 difference, which Patty's also was able to deduct that amount, which is the employer portion of the payroll taxes that were assessed on Frank's $20,000 wage. So that will bring us to total income of $66,323, which is also the same as the adjusted gross income. Frank is still a single filer, so he'll have the standard deduction of $12,000. Now you can see on line 9 we also have a different number. The qualified business income deduction has been lowered, and that is because Patty's is showing a lower net profit now. That will get us to line 10, which is taxable income of $45,058, which will result in income tax of $5,856. So as you can see, this is going to be the total income tax bill that Frank is looking at, significantly lower than what it was when we reported the Schedule C on his personal return. Now, the reason why it is so much lower, you are not seeing the self-employment taxes. The self-employment taxes would have been reported on Patty's Pub's quarterly payroll tax forms, which in this case it's still significantly lower because the total payroll taxes Frank would have had to pay on his $20,000 wage was about $3,060. So if you add that back in, he's just shy of $9,000, which is still about a $5,500 tax savings from when Frank filed Patty's Pub as a Schedule C. And the reason for that is he was able to limit his exposure to self-employment taxes. When Frank filed Patty's Pub as a Schedule C, the entire net profit is subject to self-employment taxes, whereas only his wage is now. So Frank essentially is saving 15.3% in taxes on the difference, the $46,323. And this is the main benefit of an S corporation election. Now, I'm sure you guys are all having questions whether or not you qualify to file as an S corporation or how to make the election. If you have any questions, hit us up down below. If you can't wait, go over to overdriveaccounting.com. You can call us or you can schedule a meeting right from our website. I hope this video was helpful for you guys, and we'll see you next time.